Hi and welcome everyone to Bullsmart Stock Academy and hope you're excited as today is our live session with our very own Mr. Chaitanya who would be telling us about a very interesting topic. So let me introduce the topic first to you. It's the sharing economy and opportunities for investment. So we'll be discussing on how the sharing economy is, such as ride sharing, short-term rentals, and how do they present a very unique investment opportunities for investors. So just I'm very sure you would have heard about the ride sharing services such as Uber and Lyft, because even I have, and I am not alone in this. A lot of people use Uber or Lyft on a very daily basis, and we've seen in the recent past that a lot more of millennials are also using the ride sharing services over owning a car. So they do not want, to buy a car which would be a liability to them, but rather, use these ride sharing services, which would put the liability cost down, right? So in fact, we've done a small research on this and we've seen that 66% millennials use ride sharing, services in India. And in the last 2 months, that is February and March, we've seen 33% of them, that is millennials, use the ride sharing experience or the services. So there is a huge market for this, and definitely when there is a huge market, which means there is endless investment opportunities. So we are going to get right into it, because there is not only Uber or Lyft, very similar examples of Uber and Lyft is on the more automobile kind of section. But one such example comes, which is Airbnb, right? Like how we say we do not want to own a car. Similarly, today the age group that we see out there, which is the Gen Zs or the millennials, they don't want to buy a house as well. So what they do, they invest, go and spend time and put that money in an Airbnb and have a great experience. So this is one other opportunity that we see in terms of investments that we can do in such properties, for ourselves, and keep on growing. But any which ways, guys, I hope this session is going to teach you something. And before we invest and we understand more about this topic, I am going to introduce to you our speaker. And so today we have with Mr. Chaitanya Choksi. He's the equity fund manager of JM Financial Mutual Fund. He has over 21 years of experience in fund management and equity research, and he has vast experience working in leading corporate giants such as Invesco, Chandrai Finance Private Limited, and IL and FS Investment and UTI Investment Advisory Services as well. So welcome to the session. I hope you're looking forward to share your experience that you've had over the last 20 years with our viewers out there. So welcome, sir.
Thanks a lot, Karthik, for that introduction. So, in addition to what you have said, I'll just add, a couple of things. So, yeah, as you said, I've been in the markets for 21 years, and over the years, I've seen the markets evolve. And just numbers, when I joined the markets, the index itself, the Sensex, I remember, was around 2,500. And today we all know, it is around 60,000, or, it's somewhere around that number. So, yeah, it's been a very interesting career till now. I've seen a lot of developments in terms of, how business models have changed. And in fact, today's topic is quite relevant from that perspective, how things are changing and, the rapid evolution of new business models and how that is affecting the traditional businesses.
True, sir.
So I would be happy to, take your questions and, then though I wouldn't call myself an expert on this subject, but yeah, since it's something which is quite relevant, we do keep a track of what's happening and, in terms of how it affects the existing listed companies and what can come up in the future for future list.
Great. Yeah. Great. Thank you so much, sir. And I would definitely put you in the bracket of being an expert, because you have over 2 decades of experience. And very interesting thing that you said, that when you started, the Sensex was at 2,500 and today it's like at 60,000. And we usually, whoever we meet out there in the market, someone with that type of experience usually tells us that only, how is the growth of the market. And but what is interesting, sir, to know is that everyone has a very different experience of how it is grown, and they have their own little story to tell us. So I'm going to understand a bit more from you before we move on to the main topic. Firstly, I would want to know about how does equity fund management work, and what are your roles and responsibilities when it comes to equity fund management.
Sure. So just to give some background, I did my master's in management studies. I've specialized in finance from NMIMS.
Nice.
So that's from campus. I got the opportunity to work for UTI Investment Advisory, which is a unit, a subsidiary of UTI. I started off as a research analyst. And initially, for any fund manager, to get into that role, prior research experience helps a lot. So
Correct.
from 2001 onwards, I was a research analyst, and I used to cover, I've covered a variety of sectors over the years when I was a research analyst. And I got the opportunity to become a fund manager in the year 2014.
Nice.
So research experience across sectors, you need to have an understanding of how sectors work, what are the core fundamentals that you should look at for any particular sector, what are the business cycle of that sector, is it a structural growth within that sector. So I got the opportunity to research a number of sectors, though not all, majority of them. And subsequently I also did my CFA in between from CFA Institute USA, and that also helped me quite a bit. So so that's a natural progression for a research analyst. Typically a research analyst would aspire to become a fund manager, upwards to a senior fund manager, and on to becoming a CIO. So that's a typical career path of an investment professional in our field. So yeah, it's been very interesting times. Equity, I somehow say that you can never be bored in this market, because something or the other is happening within our country, outside our country. There are so many variables which are interconnected, and one thing happening somewhere changes the whole
dynamic.
Yeah, so it's weird. It's at least I love what I do, so that's why I've been in this space. And markets, they don't let you sit idle without any work. So plus one more thing is, as you said, so many new listings happening, right? I feel India is, maybe we can have a separate session on India and its growth potential.
Definitely.
Yeah, we should have that one as well. Let's keep that a separate one. But I feel the rapid change in technology and technology adoption is bringing up a lot of new business models, which will throw up a lot of investment opportunities in the future. A lot of things can come up for listing subsequently. We have seen some of them, but yeah, I think the future overall, I feel, is very bright, according to me, especially for our country.
Great. That is super motivating to hear, and I'm sure for the age group that Bullsmart also targets, which is the Gen Zs between 18 to 25. I think the moment you say that the future is going to be bright, I think it's about also them understanding that it is the right time to start investing, in the products and in the services that are there in the country, so that they can also grow with what India has.
Just one thing: the earlier you start, the better.
Yes, and we are definitely going to hamper more on that.
Sorry, I just finished this point. The power of compounding is actually huge. That over a period of time, the wealth generation which is possible, can take care of a lot of things.
True. So true. And I'm very sure we have one of those questions relating to those, and you'd like to know about your thoughts on that in a much more detailed manner. But just moving on, because you said you started with the equity market in 2014, but prior to this you were with UTI, understanding the market and everything. So in terms of doing that, right, you would have seen the 2008 recession in India. And then when you join the equity market, becoming a fund manager, then you would have seen the COVID also, which was there for 2.5 years in India. So you would have seen two big, how do I say, things that have happened in India. And then you've still seen India, build around it. So the journey of 21 years has not been easy for sure. But we just want to know more in detail that how did you go about when these two things took place?
So a global financial crisis was something that, so these sort of things they just come sort of out of the blue. There's no way to prepare for it, in the sense that it was it was building up. In hindsight, one can say that all the signs were there, but when you're in that bull market, your emotions tend to be carried away in terms of the euphoria. So it's very important to then look at the fundamentals of the stock as well as the valuations of stocks. Dot-com bust, right? House prices had moved and then subsequently there was a crash. So from our perspective, what we try to do is have fundamentally sound companies in the portfolio with very good managements. We have typically seen that when your portfolio is, the composition of companies with good growth potential along with high quality of management, I think you shouldn't, even if such things happen, maybe there will be a short-term impact, no doubt. We will fall with everyone. It's just that we will fall a bit less.
Correct.
When revive, we'll be the first ones to recover.
So true.
That recipe, I feel, works in any market, even in a normal phase. Forget a correction phase. Sound companies, structural growth sectors, and sound management. Quality of management is very important because some questionable companies in terms of, say, corporate governance, they tend to get impacted more. And some they tend to come out with surprises, negative surprises later on. So it's better to avoid. Maybe we'll earn a bit less return, but at least we'll sleep peacefully.
So. And like you said, sir, in your previous, when I asked the question about the whole equity market, I think you said that, this market is, so dynamic. It's like a heartbeat, which you see on a machine, ECG machine, and you cannot miss a heartbeat because, something happening somewhere else will impact you, and, you need to be kind of quick to react. That is very sure. But so what I really liked out of what you just said is that irrespective of whatever happens, and we are very sure that in the in the future also there might be such situations which might arise very similar to the COVID situation and everything. And that is why I feel as a youngster, whoever is watching us, it's very important to start early. So what is your understanding and what would be your advice when it comes to money and investment for people who are young?
Just one thing I would add to what I said earlier about these, sort of so-called crashes which happened. What we have seen is that when the crash happens, and if you buy at that time, the returns that you will make will be much more. In panic situations, if you are lucky or fortunate, and if you have the funds to deploy in good companies or good funds, I think that should be used as an opportunity to, in fact, build on your portfolio. And I think that is something I would really advise our friends who are on this call. And that has worked every time. So even in the COVID panic, you would know that, such events, no one knows, right, when they can come. That provides an excellent opportunity to increase your allocation. And from what I believe, the audience on this call are relatively younger audience here. So for them, what I would like to say is equity should, maybe I'm biased, but since you are young, you can take more risk, and equity should be higher proportion of your allocation in terms of your investments. Whatever surplus you have, keep putting it, do SIPs. I think over the long term, it will continue building on your wealth. So that is something that I would like to
Definitely. And what you said, sir, in terms of the opportunity that comes when, such situations arises, very similar to COVID. I remember watching a person on social media. He used to travel, to a country, which is, let's say, hit by recession. When it is hit by recession, or just maybe after that, because he knows that the value of money over there at that moment is going to be less, and it will eventually increase. So I think that relation is quite similar to what you just mentioned in terms of investing when sometimes the market is down, so that you can see the growth of the market also with it.
Right. So just to give you would have seen how prices crashed, right, in during the COVID.
Yes.
So all was that COVID. No one knew how long it will go on and how serious it will be. But at some point, it's going to, the world will normalize.
Correct.
So just to give an example, say hotel companies, right? Who went to a hotel? No one. But the prices were as if, they were never going to reopen.
Correct.
Right? That provided some excellent opportunities. And then once the open up started, people just to hotels.
Yes.
So if you would have made your investment, just simple logic, right? There's no rocket science and all this. So just you would have made multi-bagger returns from the lows at those levels. So that is what we try to do. Try to be sort of have some logical and commonsensical thinking. You will make quite a good amount of money.
And very true, sir. What you mentioned is about that age group, that we are targeting. They have the potential to take that risk. They have the appetite to take that risk, and they should be willing also to take that risk. I think that is a very important aspect that they should take away from this. But just the moving on to our topic and understanding more on the sharing economy. So can you explain how is sharing economy different from the traditional business model in your own words?
So in terms of sharing economy, I guess we all know what we mean by that. But just maybe a couple of lines on what is the sort of what do we exactly mean by sharing economy? I'll just give some examples. So if I have some asset which I own and I there is a temporary underutilization of that asset, I would be willing to give it out to someone who wants to rent it from me, right, for a temporary period of time, for a short period of time. So I would be willing to give it out for some time. So similarly, if I want to use that asset for some short period of time, I would be a user of that asset. So you yourself gave some examples of, say, the ride sharing, right? Uber, Ola, all those. Then there are other examples like Airbnb. So if that model is also doing very well right now. Some of the other examples there where we see, which are quite common in terms of co-sharing, would be the co-working spaces.
Correct.
Like WeWork, right? Now there we know that if I'm a young entrepreneur, or I've just started out, I'm a freelancer, or a young business someone aspiring to start off a business. So I wouldn't have the money to buy my own office, and I wouldn't have the resources. So the companies like WeWork would provide me with a small room depending on the area I need. I can just rent it out for even a week, a month, or so that is another example of the shared model. Along with that, again, there would be things like, say, a Byju's, where I am a teacher, I can offer my services, and as a student, I can take those services for whatever time I need it. So that is another example. Another thing would be, say, a freelancer, right? If I'm a graphic designer, a coder, from anywhere in the world, I can take up short assignments and offer my services. So a lot of these things are happening, and I think it's just going to increase from here, right? Because the efficiency which this thing gets in it's like mutual benefit for all, right? So much more utilization of an asset which is otherwise lying idle. So yes, a lot of business models have come up. More will come up in the future, because I don't think there is any end to innovation of what is possible.
Correct.
That we will
Correct.
only get to know when it actually happens. So in
Happens.
fact, if we come up with some good ideas, maybe our young friends can, think some ideas and come up with something. Maybe I'm getting old, so I've lost the.
No, sir. No,
So,
no, definitely. And I think such models are useful for everyone. But I'm just going to one, while you were talking about, how the model works, one thing that came to my mind is very recently at my home itself. So before this, we used to always put up an AquaGuard or a Kent RO purifier, right? But now even that has changed. Now there is a company called as Live Pure who gives a new machine to you, and you can take it on a subscription model. So you don't need to even worry about having changing the purifier from time to time, doing its maintenance. All that is taken away. Yeah, I have an app where you need to pay on a monthly basis, and the water keeps on flowing. So I think these are all how do I say that the world is moving, and and these are all helping us move really faster. So it's really nice to know that. But just sir, on the same front, because we've spoken so much in terms of the positives of it, so with the positives, what does the investment opportunities also present in this sharing economy? What are the investment opportunities that come for youngsters also with it?
so there would be quite a few opportunities, but talking of our country, India, where there are very few listed companies which one can look at. So
Mm-hmm.
these are all in the initial stages of, or maybe they would have come quite a bit in their journey, but still we don't see too many options in the listed space in India. However,
Mm-hmm.
if one looks at the global picture, then there would be some companies in the US which would provide opportunities. So Lyft is listed there, Airbnb, Uber, those are all
Uber.
in the US markets. So for an Indian investor, maybe the RBI allows an Indian citizens to remit up to $250,000 per year,
Correct.
which you
Correct.
can use to buy, stocks, bonds, real estate. So that can be something which can be looked at. But
Hmm.
since they are in the growth phase right now, these companies in India particularly, they eventually they will come up for listing once they're maybe the cash burn is high because they're developing the market. But once that unit economics are in place and they start
Correct.
showing some profitability, that's when they might come up for listing. Though the capital requirements are quite significant, so maybe some company which is about to get there can
Hmm.
come listing. But
Come to
unfortunately,
list.
we don't have too many options right now. But there are quite a few platform-based companies, though I wouldn't say that they're shared economy companies, but platform-based companies are there, something like a Zomato or Nykaa.
Hmm.
Those are available, are there in the market.
Correct. Correct.
Even Paytm, on the payment side. So strictly on any particular ride sharing or Ola can come up anytime, sometime in the future or something. I'm just giving out some names which.
Examples. Correct.
So it's possible they will come up, I'm sure, but we need to see when.
Wait, yeah.
And
But I think the opportunity still exists, like you said, if not in India, the opportunity still exists abroad. And, like you mentioned, when the RBI has given us the opportunity to, utilize that, I think it is also about understanding, when you invest in a different market and specifically in a sharing economy, you also have an experience, you have a taste of it. So that when that particular, companies or, related companies come in India, you are much more prepared to then start investing into them, isn't it?
absolutely. So you would know that which metric should I look at? How
Correct.
how have things evolved in the other markets that something similar can happen here, and
Yeah.
that does help in taking better informed decisions in terms
Correct.
of our
Correct.
investments.
True.
So yes, I think there will be opportunities for sure. It's just that we need to see when they do actually come up because the number
Okay.
of business models which will be there, I think, sometimes we feel that so many companies are entering, the markets. I'm just saying across sectors.
Correct.
Considering, as I said at the start, India is something which is, I have a very positive view over the next 10, 20, 50 years. So maybe, but I'm sure that a lot of opportunities will come. And so our friends here will see,
Yes.
huge difference than what the market composition is today in terms of sector weights and what
Hmm.
we say 20 years from now.
Correct. True. Very so. And one example that comes to my head is also that when we go for an IAP session, right, and when we call institutes like you to come and speak, one particular slide that you guys always present is the how does the sectors change, how do they evolve, right? Like in one particular that was number one. In the next year it's not there at all, right? And then it comes after 5-6 years, and then it's and I think that is something which is again very interesting for the viewers who are watching, is because with the sharing economy, I think you have a lot more opportunity to kind of invest and understand. But then when we say there are a lot of opportunities, there are a lot of positives, there comes a lot of risks as well. So what do you think, so is the risk involved with a sharing economy, if there is, and then if there is, then what is it?
Right. So I think some of the things which come top of the mind as something like, say, privacy concerns, right? Maybe you're assuming my data is there out there on the platform, or the internet. So there can be some privacy issues. Secondly, something like just if I give an example on Airbnb, if I rent out my house. Now, there can be physical damage to the property,
Correct.
or if I encounter some really, if I that person refuses to vacate the house, or which doesn't happen, but still,
Possibility.
yeah. But having said that, I think the positives far outweigh the negatives. I think the efficiency which it gets in overall is much better. So
True.
I don't see too much of a negative in that, but yeah, I think these are all minor issues if we consider overall, positives which come out of it.
Yeah, but sir, do you think like you mentioned in the Airbnb example, right? Like usually people who rent out the Airbnb, they take a deposit amount, to understand that, and there's a lot of verification that is done, of that particular user. Airbnb doesn't allow if your ratings are very low, right? I just saw an example few days ago here on HSR, segment, or at the signal, which says that there's a co-working space. So they said that you don't even need to now keep a deposit, or you don't need to even have how do you say a timeline. You can go immediately also if you want. So I think, like you said, people are also evolving to understand that one person, and the trust levels are increasing. So in terms of that, with a lot of modernization on those fronts, I think the risks are getting down. But then now moving on, for me, okay, you and me are having this conversation. There are people who are watching this who would also understand through this. But over a period of time, sir, how can investors research and evaluate, who could be the potential, sharing economy investments, or, where can we put the money? How would they research that?
So, as and when we get the opportunity of investing in such companies in our markets, by that time, I'm sure we ourselves as consumers would have experienced some of those services, right?
Mm-hmm.
I feel the best way to gauge the potential is if I have used that service and what was my experience.
Okay.
If I've had a good experience, I would know that they're doing something right. And so that, and word of mouth is also something that this particular service is doing well.
Mm-hmm.
And apart from that, you also need to understand the financials of the company, the business of, how the profitability is moving, are the unit economics getting positive. So all those things, you do need to keep in mind. And as you said, these business models which have already been established and companies which have listed already in, say, the US, that can give some guiding, some guidelines on what is possible here.
Correct.
One right answer, but if you're a user of that service and if you had a good experience, and if profitability metrics are improving, I think one can have a look at those.
Have a look. Great. And like you mentioned on that, sir, like, we can always, go and understand how they are doing in the US market, understanding their numbers, their services over there, and as well as compare it with, what we are doing here. And I think that is a very valid point. If you're taking the service, how is the service being provided? I think you trust the business then, and then you can take in some informed decisions relating to that. That is very true. So now, so when moving on, when it comes to any tax implications, do investors have any tax implications, or they have to be aware of, how they have to understand when it comes to investing in a sharing economy?
So here again, I believe it's ideally investors should consult their tax expert, because they will have a much better understanding of the tax implications.
Correct.
One is for a service provider, one is for the service user, and one is for the platform. The
Correct.
taxation impact can be different for each of these. So ideally, we would suggest that one should ideally consult the tax consultant and take views on taxation impact. So it would be different for each segment. So I'm sure a professional opinion on that would
make more sense. And I think, like like we were being speaking, like once these things start coming in India, and they start getting listed, I think those rules and regulations will also be put up by the governing body to say that, okay, this would be the tax implications too, and then people can read over it. And I'm very sure people like you would also be out there sharing that information for people to trust that. So I think that is very true. So moving on then, what do you think are the trends which are developing in the sharing economy that one investor should be aware of?
So actually, that's an interesting question, because of these new models which have come up, the traditional models are getting impacted, right? As you said, the Olas and Ubers of the world, which is very good from an overall perspective, but that is hitting the traditional car company, right? You said millennials are, what, 60%, they would prefer a ride share rather than own car, right? So that does impact the
automobile sector.
Instead of 4 cars being used, 4 people can share a car and take that, or whatever that number is. So the trends which are emerging is, one is the impact on the traditional businesses. I'll give you another example. Airbnb, right? Now that is hurting the hotels business as such.
Correct.
Why would I go to a hotel when I can have an apartment with a kitchen or whatever it is? Maybe at a cheaper price also.
Correct.
And with the privacy that I want. So that is something which is happening, and do we need to factor that in when we look at our investments? And apart from that, the trends, I feel that something new will keep happening as we've seen how technology has evolved, right? I think we should hand it over to Mr. Ambani for Jio, for the data evolution which has happened. And so right now we can, pay anything. We can not carry cash at all. And that is something. So that has enabled a lot of, data usage, which otherwise would not have come.
Would have not happened. Correct.
Such a rapid pace. So I think trends we need to watch out. I'm sure there will be something new, because I don't imagine I had thought 20 years back that I could book a cab on my mobile phone or something like that. So maybe 20 years from now, I would say that I would never think of something I would have done. So
correct.
That's something which will keep evolving, and I'm sure our there is no end to innovation, of our people as well as globally. So
true.
And especially given what we call a Jugadu culture, we can come up with.
That is very prominent in a country like India, and I think we've all been built up like that, and it's good in some ways, because you understand then how do you find a solution rather than just sticking at the problem. And I think that is very important. But sir, what you said about Airbnb, or even when it comes to the automobile industry, where people are okay, we gave it the fact that 66% of millennials want to do a ride sharing rather than buy a car. I think if you ask me, someone who is coming up from that age group of the millennials and all, I would say that is right, because it helps save the environment. There are less number of vehicles on the road, less pollution, and that is how the effect goes on. So how do you still think, but there needs to still be a balance. It cannot be extremes of both ends. There still needs to be a balance. So how can investors balance the potential benefits of investing in a sharing economy with having a sense of environment sustainability and social responsibility concerns, because I think today the world is also a lot concerned about that, and for that they need to also have a knowledge about that. So how do you think they can have a balance when it comes to this?
Yeah, so I think this there's a lot of awareness about ESG now, even in terms of investments. If you pick up any annual report of any company now, a good quality company, or nowadays, most of these companies come up with their a separate section on ESG. What doing in that sense. So the companies which are not at par with what's happening on that front, they will lose out.
Correct.
And I'm sure they realize that if they don't match up to what is required, they will not be, ahead of the game, and that will impact the valuations also. So eventually, I think each company realizes their responsibility towards, ESG, and I'm sure they will come up with it, because if they don't, then investors will at some point, question them on it. Just talk to any cement company. They will tell you that how they have reduced the power consumption per ton of cement produced.
Correct.
How they're coming up with waste heat recovery plants, to reduce environmental damage, or whatever you call it, and reducing the carbon footprint. So all that will happen. In terms of balancing, yes, you ideally, when companies are ahead on that curve, they will actually benefit.
More.
So I think, yes, even the companies which are getting impacted because of these changes which we are seeing, they have to come up to the next level in terms of technology, or the rapid change which is happening. How they do it, it's let's see.
Going to be.
See, it's a very interesting time now. Electric cars, and so that is a continuous debate that we have with debate or discussion when we talk to companies. So that's what I think. Things are interesting, and we are in interesting times.
Yeah, that is true. And I think before, if please do correct me if I'm wrong, sir. I think before, for companies, doing anything, on the environmental, or the CSR things, was more of a checkbox or more of a PR activity, and which was not impacting their business. But now these things are starting to impact their business, and if they do not make the changes, I think they're going to die down. I hope I'm telling the right thing, sir.
Absolutely, that's what we are seeing actually. So, in fact, if you look at any company presentation updates, any quarterly update, they will have a section at the end on ESG, what they're doing. So that shows the importance that corporates have also realized on the need to deliver on that front. So that's something I feel which will continue, and especially given what we are seeing in terms of climate change and global warming, it's going to get worse. So I think if some companies they try to show what they're doing in terms of CSR, and I think it's a better thing to have.
Better, yeah. True. And I think if all of them come together with that same thought process, I think it should not just be again a tick box or a check box. I think it should really be for sustaining themselves and sustaining the natural things, which are habitats which are there around them, and I think that will really help the planet. So I think, sir, coming to the far end of the discussion that we've been having, and it was really nice to hear your thoughts. So just to end, what would be your advice that you would give? You have 21 years of experience, and the more the experience, the merrier it is. And what would be your advice to the millennials, people like me and people who are watching, when it comes to investing in sharing economy? That is one aspect that I would definitely want you to talk about, but also investment in general. What would be your advice?
On the sharing economy first, I'm sure there will be opportunities coming up in the future at some point. And that will be the future. As I said, the traditional business models will get impacted, and the way we do business and the technology change and adoption and the transformation that we're seeing is going to be huge. And I'm sure there will be opportunities which we will get, but we just need to do our due diligence on that front and look at the financials of that particular company, of that sector. Try to get some guidance from what happened overseas, and I'm sure there will be a lot of money making opportunities. On the existing scenario markets, I would suggest start early and build a corpus, and don't get carried away by manias or fads or something. I'm not saying, or I'm not pro or against anything like, say, a Bitcoin or something, but that's something which I don't, it's difficult to ascribe any value. So don't get carried away with what's
Correct.
happening globally. There is, ultimately fundamentals will prevail. There is
Correct.
the real value will come out at some point. So even that we use for our stock selection. If we feel that there are some issues in terms of corporate governance, it may not come out for a long time, but eventually it can come, and the stock will just crash. So important to, even if you're doing direct investing in equities, very important to check on the management. I think that's the biggest criteria. Along with that, a growth sector, because I think we are a growing economy. At least as a fund house, we have a very high
Correct.
growth focus, and do your due diligence and then invest in. But I feel I'm not promoting mutual fund because I'm in a mutual fund, but I think that's a very good way to invest for the younger guys who don't have the time to actually do
Correct.
research on stocks and companies. Look at good funds, do your selection, see their portfolios, see their track records, and they would have some history of the performance, what they have done over a longer period. If this fund is consistently doing well, that means they're doing something right. And if it's some theme that you particularly like, like business cycle fund or a IT fund or a banking fund
Correct.
or a mid cap fund, I think mid caps are within segments. I feel mid caps can do better than the
Very well.
large caps, small and mid versus large, because the smaller and mid-sized companies have a higher runway of,
Potential.
right? So I think do the due diligence, and mutual funds are a good avenue to invest your money. Even if you're doing direct equity, but do research on the stock and the sector. And I feel SIP is also a good way to invest, because it's not impossible. It's impossible to time the market. I
Correct.
don't invest tomorrow. So every month or whichever time period you feel that you will have cash flow, do SIPs that will build wealth over the long term. That I'm very sure about. Yeah.
That's really nice, and the very right thing that I got from what you just said is that for youngsters, why it is essential to start with mutual fund is because it's not that risk is there in everything, but I think there are a lot of reports out there to understand where is it that your money is going, and where is it that how you can also generate that money from putting that investment. And with the SIPs, and at the very start also you said that when you start early, you understand the value of compounding, and you kind of make that money grow over a period of time. And for them, and I hope that no one out there who's listening to us today is of the opinion that okay, it's not a scheme which will give you 100 rupees tomorrow today, and then you wanted to get double tomorrow, right? It is a slow burner, but it is something that will definitely come, and hope you have a very bright future as you go on. So I think it's a very interesting topic to go on and speak on. So yes, so before we let you go, before I give the vote of thanks, any final words to our investors, or to the people who are watching this session?
I think we are in very interesting times, and we are going to get a lot of opportunities to invest in companies and be bullish on our country. I think we can do wonders.
That's great. And I think I hope, and I think what progress we see in India, I think viewers also see that, and they, like you said, they are bullish in investing in India. So thank you so much, sir. On that note, it was great listening to you for the past 40 minutes about different thought process in the economy of investment, and how it works and everything. So definitely, like you mentioned, we will also understand and have a topic with you for understanding how the growth of India is going to help the youngsters. So I will definitely make a note of it, and we'll have a session soon. I'll trouble you again. So yes,
on that, and yeah, we would be more than happy to do it.
That is great, sir. So on that note, sir, thank you so much. We also thank JM Financial and Mr. Sandeep, who's helped us, put this session, all together, and have this conversation. Hope you also enjoyed, sir, and hope our viewers also enjoyed.
Very interesting question, and thanks a lot, Karthik, for giving us this opportunity. It was great interacting with all of you.
Thank you, sir. So, guys, all of you who are watching, hope you like this session. So, if you like, do comment about how did you like the session, and if you have any questions, do put it out. We will go ahead and ask sir, and we can always in the next session that we do, we can kind of answer those questions for you. So on that note, yes, please do subscribe to our channel, Bullsmart Stock Academy, and you can also go on our Instagram and Facebook pages and follow us for any live updates that we are doing. So thank you everyone, and have a good weekend, end of March, start of April, and hopefully the upward curve is something that we will always keep on seeing. Thank you so much.
Thanks a lot. Thanks. Bye.